Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, November 23rd. Firstly to the S&P 500, and here we've seen a change of trend today. Technically this current candle has made a lower high and a lower low. Finding resistance at the previous 2093 area, an area that held as resistance for the previous candle, but also finding support at the bottom of the highlighted yellow zone of previous support and resistance. The formation of an indecisive candle here does suggest that there is potential for the buyers to come back into the market, and we also could see the sellers, and that's what the indecision is about. Formation of an indecisive spinning top type candle at the top of a significant uptrend does suggest that there is a possibility of the sellers coming into the market, and suggest that that trend that was in place previously that was quite strong may no longer be in force, and we could see the sellers take control. Now, the important word is could, so that's why we like to see formation of a candle with a lower high and a lower low in the next candle to just confirm the change of trend that we have seen here today. Now obviously moving forward, this support will continue to be the benchmark for the sellers down around 2080, 2079, and if we do see the sellers come into the market strongly, looking to strong support to come in at the Kijun-sen around 2066. By the same token, the benchmark for the buyers is 2093, and if we can breach up through there, we could easily end up trading to the round number 2100, and even perhaps beyond if we can build some momentum through there. In terms of Ichimoku, we have a bullish market in all three timeframes, trading above the cloud, the Kijun-sen and the Tenkan-sen. Interestingly, the Kijun-sen has started to point flat, and very often when we see that, price action will tend to be attracted back towards it, and that makes this support just below where the market is very, very important. So there is a possibility of the trend continuing to the downside, but the indecision in the market does suggest that we do need to be patient, wait until we see how the market reacts to these areas of both support and resistance. And to the bands, and here we see the market trading within the bands, and it suggests that we have a rather neutral market now. Previously we had a very strong tone to the uptrend, selling off, lack of follow through when we tested down through the lower band, the market retracing, finding resistance close to the upper band, and now finding support on a couple of occasions close to the middle band, and suggesting that the market is neutral and may be beginning or preparing to transition into a downtrending phase, but that would we would need to see the market trade through the bottom band with some strong follow through and down through the swing lows, previous swing high, in a bearish manner to confirm. Now, by the same token, if we do see the buyers come into the market and trade up through the upper band with some strong follow through and trade up through this previous swing high 2117, we then could see the market continue to trade significantly higher. Now just looking to the advanced decline line, and the advanced decline line is a measure of market breadth, and we use it in various ways looking for divergences, but very often it's handy to put a 50-day moving average on it, and quite often when we pass down through the moving average, it does warn of a substantial retracement of the previous uptrend, but also by the same token when we move up through the top through to the upside through the moving average, it can suggest that the buyers are quite strong, and the market overall is quite healthy, and does suggest that the trend will continue. Also, we've put the bands on here, and very often when the market or when the advanced decline moves down through the lower band, it does suggest that there is quite a very strong negative tone to the advanced decline, and suggesting that there is very good potential for a change of trend to the downside, but also to the upside as well. When we move up through the upper band on the advanced decline, it suggests we have a very strong market. So at the moment, we saw previously we were up above the upper band, suggesting a strong market, and then the move back down to within the bands predicted this sell-off that we saw. We also then saw the market trade down through the moving average, but we've now recovered, and that suggests that there is good potential for this trend to continue based on the advanced decline line. Next to the Horland Index, and I use the Horland Index here in 3 time frames. The shortest time frame here is very good for looking at divergences, as is the medium term time frame, and the longer is best used with trend lines or with moving average, and here we have the 20 period moving average. Here, when we move above the upper zone here, this upper band, it suggests a very strong tone to the market, to the upside. Here we move down whilst we saw the recent pullback, and now the market is recovering and just up above the moving average on the longer term. The medium term shows a recovery going on, but the short term has been up above the bands, highlighting a very strong tone to the trend, but it's just hovering around that upper band, and if it moves within the bands, we could see it move back down, and it could forewarn of a potential short-term top in the next few days. Now, the next 2 charts measure the percentage of stocks in the S&P 500 that are above their 1 standard deviation Bollinger Band, and on the bottom subchart, the percentage of stocks in the S&P 500 that are below the 1% or 1 standard deviation Bollinger Band. Here we see that recently, when we had the sell-off, the stocks above moved down below their bands and suggested that there was potential for weakness in the market and potential for a sell-off, and we saw the percentage stocks that were below the bottom band start to move higher as the market sold off. Recently, we've seen a recovery along the way, with the percentage of stocks above the band increasing. They have just started to come off slightly, and the percentage of stocks below the band have been continually moving down, and this suggests that there isn't any great danger yet, but if we do see that percentage of stocks above the upper band and the percentage of stocks that are below the lower band switch, and those below the lower band start to increase, it could be a forewarning of a potential short-term high in the overall S&P 500. Next to the Nasdaq 100, and here we see formation of a very much larger black-bodied spinning top type candle than we saw for the previous day's trading. This suggests that net momentum has shifted from the buyers, which was very small for the previous day, to the sellers, and in a much more considerable way. The sellers have closed with fairly weak control. They have closed just down below the midpoint level, but only just, and however, formation of that black body candle suggests that net momentum to the sellers is quite strong, and suggesting good potential for a change of trend. Now, just looking where the market traded to for today, we tested the 4659 level, previous resistance level, previous support area, which has been tested on multiple occasions in the recent past, and support coming in here may see buyers come in, and it is an area we do need to watch very, very closely. But the short-term dynamics in this candle are certainly favouring potential for a change of trend, so 4659 becomes very important. I suggest that if we do breach down through there in a strong bearish manner, we could end up trading down to the Tenkan around 4596, so that is an area we should be watching for very strong support to come in. By the same token, watching resistance overhead 4696, there is a possibility of the buyers returning back into the market. Just looking at the band chart, and we have tested to the upper band today, and that has held a strong resistance 4706. By the same token, testing down to support at the middle of the bands. We do have the band squeezing up, and this suggests that the market is preparing for its next move. It could squeeze even tighter, or it could break out, but the squeeze is going on, and that suggests that we should be ready for a breakout and some strong trending activity in either direction. And to the Russell 2000, and this is the most bullish of all the indices, so obviously the capital has been flowing into the smaller cap stocks as opposed to the larger cap stocks, or the narrower tech stocks in the Nasdaq 100. The trend has continued on its way, and this is quite a good sign for the markets. Strong white body candle. Buyers closing with control, a moderate form of control, just up above the midpoint level, moderate to weak. Important price rejection coming in at 1182, previous resistance area. And this is an area that has held as resistance in the recent past. We did breach through there. It held as support and now acting as resistance once again. So that's going to be the benchmark moving forward. A white body candle has formed again, so the net momentum is still to the upside. And this build of momentum does suggest we certainly could see the market breach through that 1182 area. Now, if we don't see that, however, there is very good support down around this 1167 area with the Kijun-sen trading just above and the Tenkan-sen trading just below, and they may provide a solid platform here for an area for the buyers to come in off if we do see any retracement. In terms of Ichimoku, we do still have a bullish market in all three timeframes, supported by the Chiker span, and this suggests that if we don't see the trend continue to the upside here, we're likely to see the market find support at one of these areas and buyers return back into the market solidly. Moving next to some stocks on a short-term basis on the daily charts, and Disney is one that we've been watching for some time. DIS is the code, and here we see some selling coming into the market today. A black body candle with the sellers taking control at the end of a very strong first time frame uptrend that we've been in for the past week or so. This suggests that there is potential for a change of trend here, and the market will be approaching some very strong resistance around this previous swing high around 122.80. At the moment we traded to the 120.65 area, so even if the trend does continue to the upside, we could find some resistance there. But the selling here for today's candle does suggest that we could see the market retrace, and we'll be looking to the Tenkan-sen to hold as support at 116.99 or at the upper band at 117.90. In terms of relative strength and comparative and its momentum, we are in a leading quadrant here, so leading the overall equities market. Over the last couple of days, however, we have seen momentum of relative strength start to move backwards, and it suggested that the trend in this relative strength comparative was not as strong as we'd like it to be, and suggesting that there was potential for some slight underperformance to come in and a weakening of the relative strength comparative. So we will be watching the next candle very closely for a potential lower high and lower low. Now, Home Depot has been a very strong stock in the last week or so. In terms of Ichimoku, trading above each of the Ichimoku indicators, both of the indicators, the Tenkan-sen and Kijun-sen, are pointing up very sharply, showing very strong upside momentum, and the relative strength comparative trading well outside of the upper band, and suggesting that we have a very strong tone to the uptrend in the medium term time frame. Relative strength comparative is above 100% as its momentum, and the momentum here is well up above the bands and suggesting a very strong tone here to the upside. The buyers are continuing in with control here. This stock has been outperforming the overall market very, very strongly over the last week or so. And moving to VeriSign, VRSN is the code, and this is a stock that we have been watching very closely for the past week or two. And here we see a continuation up above each of the Ichimoku indicators, up above the upper band, reflecting that very strong tone to the market. As I've mentioned, it was looking very overdone. We don't have any sign of that yet in the on the relative strength comparative. Both relative strength and its momentum are above the 100% level, so suggesting that this is a leading stock and strongly outperforming the overall market. The tone of the trend in both the relative strength and its momentum is very strong, but the formation of a very small indecisive candle here suggests that we may not continue to see the strong outperformance that we've seen recently. This suggests that there is a very strong possibility, and it is only a possibility, of a pullback. So we will be watching for a potential lower high and lower low. And if we do see that occur, we're likely to find very strong support coming in initially at the Tenkan-sen, trading at 86.34, or at the upper band at 85.94.